not check on those. Better than Joby. Wow. They're gonna pull that off.
When you're that long, it's gonna be. Yeah.
Yeah, power and yeah. The budget and we'll do a work session. It's now 6 o'clock. And we're gonna discuss it, what measures and discuss the draft order report. Fiscal year ending June 30th, 2025, Chipman, Lawson and Allen, LLP. And Steve is at the table, welcome Steve and David.
No, thank you.
Are you ready? Please start.
Perfect. So, my name is Steve Gross. I'm a principal with CLA. I work out of our Rhode Island office in the state and local government insurance practice. I was the one who ultimately reviewed and signed off and signed the opinion, the report. The second slide, we can skip that. Here we go. Here it's just a legal disclaimer. The agenda, I'm gonna cover scope of the engagement, so what I worked on, reporting results, some financial highlights, required communications to those charged with government, which is the council in this case. From us, your auditors are required under auditing standards, and then my contact information, if you have any questions that you have afterward, that, you know, keep it open now, you can always reach out to me, ask any questions. So moving on to the next slide, which is slide 4. It's the complaint skill. So the audited finance statement that we're here at 2/30/2025. There's also a single audit under uniform guidance. We will have that completed prior to March 31st deadline. The fiscal financial reporting framework is GAAP. The applicable auditing standard is generally accepted auditing standard, as well as generally accepted government auditing standard. And then the other terms of the engagement is just that we need to understand a test of internal controls, make sure that they provide reasonableness over the internal controls over financial reporting as required under government auditing. And then
This question, I've seen or probably do all of our several.
correct. So that's ARPA, Title I, Cloud Nutrition, all those type of grants. And then I will cover our regard communications to the government, I mentioned with the account manager. On to slide 5, which is our risk-based audit approach. So when we design our audit, we gain understanding of internal controls of the town, both the town and school side. We also look at revenue recognition, as that tends to be a higher risk communities with a lot of elections that are coming through tax office, as well as no grants that were disbanded. Then we move on to liability completeness. This is your debt, any unreported liabilities at your end, which can be just the timing of an invoice, where there's an invoice that was billed for June, we got in August or July, just making sure those invoices kind of accrued back to the year that those services were performed, right? We also look at sneak estimates. These are your pension and your OPEB plans. So there's actuarial estimates related to those, and there's a lot of assumptions that are made. So we had to be covered with that area. And then there was new accounting. So that's GASB 101 this year, which is compensated practices, which is how much you pay out to employees at the time of elimination. That accounting formula changed a little bit this year to be more based on how time is earned and looking how that liability projected over numerous fiscal years, rather than if the town was to cease operations as of June 30th, which is what everyone was required to be paid out. So that calculation changed a little bit. On the account side, there's essentially no effect based on how the bargaining unit agreements are set up here relative to what's the regular annual payments. There was a little adjustment on the school side, but looking to plan. So reporting results, under generally accepted auditing standards. We issued a unmodified or clean opinion. This is the highest level you can obtain. We had that opinion over your governmental type activities as well as your business type activities and all of your fund level reporting. All right, moving on to page 7. We also have a report on governmental auditing standards. This is your internal control of financial reporting, which there was no material weaknesses or significant deficiencies that were noted in those internal controls. And we noted that there was no non-compliance with state law, regulations, and contracts. 8. So this is just a high level view of your balance sheet and a fund level financial statement for governmental activities. I'd like to point you to the first one, which is your general fund, which is the most scrutinized fund that you have. The biggest item here is the $7.6 million on the side of balance. That's essentially your rainy day fund. So for anything that you would foresee happening, you can dip into those reserves to cover such cover costs. On a combined basis, there's all those other small funds. You're at $15.6 million on a total fund basis. So your general fund, which was at the 10.2 at year end, combined, that decreased compared to the prior year by 280,000. So not too much, but. And then in fiscal year 25, we noticed that Smithfield Fire Rescue, that's new. So if you look at fire balance statements, that was considered a non-major fund. So that's presented, which means we just look out with a little bit more of a little bit more scrutiny, just because the balance and the level of balances within that account, that fund. All right, moving on to page 9. This is the profit and loss entry or statement of revenues and expenditures that changes in fund balance in governmental terms. Essentially, like I mentioned on the previous page, your general fund decreased its fund balance by $181,000, and on a totality, there was a decrease of $335,000, which essentially means you're spending as much as you're bringing in as a whole. It's a good thing. Moving on to page 10, this is just a highlight of your long-term debt. Since there was no bond issuances, if anything tended decreased essentially with the timing of the debt service payments. Your net pension and your net OPEB liabilities also decreased based on actuarial results. Only increase really was the lease liability, which means you had just a new lease that came onto the books current year. And then the compensated absences balance increase is based on current activity as well as implementation of GASB 101s. Moving on to the next page, which is page 11. This is just a highlight of your pension plans, both state level and the single employer level, which belongs to you individually. The state banks, you can't really affect that much as the state determines how much gets picked up into those trust plans with the state treasury office. But as you can tell, most of them are fairly well funded. Anyways, the lowest one being the teachers at 67.7%, which is still not that bad of a territory. For the single plans, those are the ones that you do have the ability to affect by determining how much contributions the town should kick in, so you make sure those accounts are funded. As you can see, I kind of gave you the last 5 fiscal years, and they've been generally, for the most part, on an upward trajectory. It's good, being that you have for assets to cover those future liabilities. That's your piece. Maybe all and I'm just gonna talk about the budgetary items a little bit. So the general fund revenues and other financing sources were over budget about $2.3 million. As you can see, the majority of it was the property tax, being up $456,000 over budget. Intergovernmental revenues was up by $4.5 million. Licenses, fees, and permits was a quarter by $483,000. Interest income on cash being held by the town was up over by $411,000. Then clear financing sources was under budget by $1.4 million. And then for general fund expenditures and other financing services, that was also over budget by $2.1 million. The primary cause of that is public safety at 1.3, public works at 682, and the municipal capital improvement was over budget at 1.1. So overall surplus was $174,000. And the difference between that and what's required on your general fund a few slides ago, just the basis of accounting. So there was budgetary, this is reported on budgetary basis, that's reported on the basis. Then other communications, there's, like I mentioned before, communication by us or auditors to those who are governance. We considered electronic tools to help plan our audit procedures. We didn't express any opinion over the effectiveness of this internal controls. There was no control deficiencies that were noted. There was no material weaknesses that were noted. We thought the form of financial statements were clear, consistent, and full. And we also noted that there was no non-compliance or other matters that have been noted. Overall, the purpose is to communicate the audit results of governance. There was no changes to the audit scope plan. Like I mentioned before, there was the implementation of gas leading number 101. It's compensated absences. The note financial statements disclosures are beautiful, consistent, clear. The significant estimates for the pension and OPEB, as I mentioned. Audit procedures were appropriately applied. There was no significant difficulties encountered. There was no disagreements with management. There was no other findings to report. There was no consultations with other auditors or accountants. And we did have a management rep letter that was signed at conclusion of the audit before we could issue the final report. So since you all have that, that has been done obviously, and that there was supplementary information that was also visible to those branches. That management letter that I mentioned, which was paid to the capital asset enterprise fund, as well as interfund payable receivables. Essentially, we just we have our recommendations there to tighten things up a little bit. We're on the school side, make sure that the interfund receivable and payable agree between both the town and the school. And for the capital asset, just making sure that those assets are being reported on the right fund. Moving on to page 17, that's our contact information. Raquel wasn't unfortunately able to take it. He's actually expecting her first child this week, so I give him that off. Being a nice boss I am, so and then with that, I open up for any questions, comments, concerns.
This school,
Yeah,
we meet with the school side,
the school committee.
no, the school side.
Yes, so we do our audit with the in conjunction with the school as well.
Why is this fund balance so?
That's a question for them. Essentially, all I do is report the validity of the results, but it's something that you and their management will have to work.
Let me go to your question. So this audit that we have done, you didn't do the same level of audit. There's, we don't look at the transaction, we're just speaking what she sent over. What's the level? I think that's.
So we conduct a audit at the same level as the town school, so we essentially can audit, you guys are considered one consolidated entity for financial reporting. So we spend time here, we spend time over there, we learn their controls, we do testing with them. We do single audit with them, federal grants that you mentioned. We do a separate standalone financial suite for them as well.
So there is one.
There's one audit for the entire, and that's required by state law.
What do you see as red flags?
So the management letter, obviously, is like where I would think to first of all, this isn't. In addition to that letter, this isn't just like for you guys, but as a industry as a whole, all municipalities. Obviously, IT is always a concern, especially with all the ransomware attacks. Even seeing it more and more and making sure that you have the right level of coverage on the IT side, making sure you're doing data penetration testing as well as making sure that protecting your data because you know you have a social security number and a lot of bank account information and you want to make sure that that is under philosophy under your IT environment.
So a question, anywhere, look, I did a search on the, anywhere in here. Is the word GFO.
I
A
believe
couple of times, but a
couple of times.
For financial stability, it's more.
So you guys got a AAA certificate. And essentially that means that you guys support a final level that those standards that earn that certificate.
That's my follow. This last week you were here.
I wasn't personally here last time.
I see it's switching on.
So this is my first year as a principal.
So I think there's, I've been doing this, the FRC, I mean, one of the things, town council, not this one, but we bought an entire city transaction. We know that's not true, it's right, it's some reality.
It's that risk-based approach that we talk about, so we plan audit, we audit every transaction, it would be a forensic audit and it costs. Way more money than the taxpayer that you want to pay and audit would be done.
So here's my question. You're not responsible this evening to tell us that we're in a good financial position. They're just doing it based on auditing. That's a scope of work, make sure the transactions are there, make sure. Material fees and so when someone asks, sort of, what's our grade for the financial stability town? That's more for financial. Or Moody's for S&P.
That's your financial provider, they would.
That's not, I think that's confusing. Sure, here to tell us.
Essentially, I tell you that the numbers aren't materially. So I'm relying on Congress to make decisions about how you want to take the town on its data for the taxpayers.
But now.
Material, you say.
Materially misstated,
Misstated.
yes,
You can really give it up.
sorry,
It's okay.
the companies who know it, okay?
Right.
You know, maybe picking things. Why Apple is always flying,
I
is that because of deficit that we talked about?
think that is what.
Well, there is a deficit to fill in the end of the term, but whatever, we paid and made up front on purchasing fire apparatus years ago, I believe. And then another 1.2 million was put into the budget. So last year, we only paid 800,000 for some. After that, and this year, we're gonna try to reduce them. Take less out, so we are estimating in the next 2 years, that'll wipe that out again on the positive side. So that's, we did take a look at that in the last report, make this year. So I think that's what that is.
Yeah, that was one of my questions coming up. Why was that added to? Agent plans? Yeah, what's the reason?
So there is a calculation that's required by GASB, it's generally accepted standard, governmental, accounting standards essentially. And there's a calculation that based off the balance sheet and the P and L's numbers. And if you hit those thresholds, they're marketing, essentially it's 10% of the governmental level for this fund, and then 5% of the NGA as a whole. So if they're asking for liabilities, revenue, or expenses are higher than that, and it's due to be called as due audited separately. Does that answer your question?
It's. The enterprise ones, and so those were all included.
Yes. Yes, we all did.
Um, What did you find with respect to the school? Because we are. Looking. At the revenues, whether the revenues are sufficient to cover the expenses, but the additional expenses are being. The operating expenses.
So all I can do is report on the first essentially, so I can tell you that your fund balance increased by $64,000. So essentially, the revenues exceeded the amount spent out, so. Essentially, all I can tell you is like, that's what the number is, and. You can make a decision off that, or your financial advisor, or the consultation with your finance director and manager. Also, help direct the conversation.
I think that goes back to your question, they have to stay within the boundaries.
Yeah, we get our independence.
So possible, we have with Josh and DOC. And we will add if the operating funds are operation.
We do have a fund balance in that. That account. But then also, he just, I think with the Fair Dot is doing a survey on the ratings also.
Right.
We are,
Because,
the targets,
Is
we're
it,
not, it's not, okay, it's right.
and if, like I say, if something happens. That building. It's covered. And you.
Just a quick question, I heard speaking in, pretty really like talking, how do they, any Steve, between us and them? Meaning the kind of capital to cover
No,
that, so there are now outstanding loans from the general.
no, we have the only one that we have it there on, put out.
Share that's.
But that's.
And I don't know which one of you can answer this, pages 117 and 20. When we do your. Changes in fund balance, because I've done fund balancing and it's since 2020. Yes, but you already did that one. Just trying to read the. Could someone explain the second, meeting? I'm sure that's the carryover, is that, well, it's not, it is. Okay, so I thought we would get rid of that one, so it's the last year.
So we have.
Last year.
Don't so there is a little left.
Okay.
That will go right off at the end of the next year.
All right, so if it's 17.
What is the time?
I'm looking at 8117, the column 6 carryover. Shapes. And I thought they could have been tools, but tools is again different, obviously, some people. But, so you're telling me.
So I think, we use,
There's a lot
it's
here.
like 100. Right, so that was the carryover balance from the previous year, because we still had, we didn't write them all of them, so we can only write them one. I think, that first,
We started in Humber
we,
this last.
yes,
Summary.
yes, but we were overall more this year, and we will finalize later.
Maybe I misunderstood, because I thought we. Stop.
We stopped. So we stopped,
Reading that.
yes,
Okay.
depleted
So the
now,
ones that are there, we're.
right, we didn't add any March here.
All right.
The stuff that was there as of 6:30, including the door, now you're keying into that.
Because,
26.
you know, what I wrote down there was. That, those routes can do the mass wage hardship. Right, profits, income and losses, right, and they can. Because you can't do zero based budgeting, it's not very easy. So. You understand what I'm saying?
I think that was your totally last recommendation. Was that-
And we had talked about, we stopped encumber, I'm using the word encumber, stopped adding to the roads accounts. Started breaking it,
Right, we just are gonna continue to hope this happens.
right, without adding,
That runs out.
Yeah.
You expect that to happen.
Yes.
So, yeah,
yeah, it's a year 26, I think,
that's-
26, yeah, I think I have one. It was a little bit. We took this out.
No. The bond rate is interesting. Because that was part of what I gave the council several weeks ago, and it hadn't changed. Again, no, I took them up. You said your S and P on the change to the plus. No, it right, I just did some research on it, said it's in plus, you may not be right. Do you have a certificate or something like that? Right,
The S and P gives me some. You're
Okay.
getting.
because that, we're close to, because that's why I asked the GFOA comment is. I hope the council read what I did, give them any comments from it, but they start our fund balance, and that's my last question, but somebody. You know, the way the fund balance is in property, it's big, so I should say. But there's a lot of things to it, and it's hard for me to easily, which number. We things that, because it's hard to put it here, because here's what I have. I have in 2020, we lost $500,000. Says for 21, we lost 400,000. In operating surplus, and so on. And then our fund balance in 2020, 50 million, after fiscal 2014. And, but I want to make sure that my numbers are, because you have a lot of numbers. In why initially the GFOA, there is a very strict standard. Of how much you have in fund balance, how it affects the bond. 16.7% a lot. Two months, 3 months of expenditure. It's analogous, so when I do it, it's analogous to all of us around the table, just with the money in the bank, something happens.
I think one of the concerns is, and I brought it up, if I spoke about it, is that borrowing of the household with generated debt. Not that you not get. Where we need to finance things that we have money just finance. So we don't continue, they just eat into your fund balance, which we were
100% correct, and then the bond rate would change, and I've stated this concern all for what you guys did. Five of you, all from Greg said that publicly, I ignored it. There was a lot of stuff on the next 2 to 3 years. And I know it's just, and I said that with God, very worries about that, especially with all the things. I mean, I compared us to 9 out of 8 other towns, we're kind of in the middle. More. You gotta be careful about that. Really good. Very,
Let's be flex like these for 2.5 million. Right. Logos.
we did borrow books. That's not the book. Well, but it's still that it's, no matter how you look at it, it's just a different part.
But, you know, talking about a fund balance, there was noticing that. That amount seems very big over the years. In 2021 fiscal year was the 30 million. Now it's half of that. So
Well,
my question is, I'm on page 209 and it's usually the modified October's. Following it for years.
It is erratic, even if you just. Well, there are companies, and I didn't really should learn. That, to be honest. And it was all I said was we are what we are. We'll call that as a.
And
I would have to do some research on last year. But,
Bonding.
right, yeah, it is, yes.
We've been ever so busy on the building. You have whole bunch of paid, if we would give you this, you didn't borrow. Right. Like, thank you for the top, right?
So they gave you the.
What they did, they gave you, and then you had to justify it.
Yeah, we worked on the particular act was coronavirus with beef and cows, which was just essentially revenue at that time. It's just, here's money and expire.
But that, everyone you can have cash. Because you're getting the check from treasury for a quarter of a million.
But it's considered revenue, so it drops it from the balance.
Because that is considered revenue.
It's, okay, it's on the road.
So you're right, it's as local accounting.
Right, right, that's what I'm doing.
Debit.
There's no wall. So it doesn't cash, well then, problem is, we get it on you. You just, you could have got it on December 2020. But you didn't spend it until 2022.
Well, you don't have to expend it, go that out.
What
Yeah,
happened?
this year.
Was it 21, we had up until the end of 25 to spend.
Yeah.
Right. Did it just end?
It had all.
Yeah, it has to be. It has to be, obligated, has to be obligated and spent or paid by this
This
coming.
items.
That's very
You're right.
specific.
Yes.
But then just that,
Was the key cards part of that? That we did at the first council meeting at this term, is that the ARPA? That's
Like the meeting out there.
Yeah.
So no, we have to, obligate, so we said we were going to use it on this, and our reports that I send every March to. They show this is what we want to spend this money on, and this money, as long as you obligate all your money, you have to spend it.
Oh, the shit, okay.
but I'm gonna go back. If somebody proved me wrong, you get in the ARPA, they write you a check, we might have a 2 or 3 fold in the window. That really theoretically goes in fund balance, theoretically, you understand, and it can still be there, but then you take it out, it's gonna look like deficit.
But it's not on the one balance because it's deemed as a current revenue, and so when it's spent.
Depends how.
So it's an asset item, and corresponding with the village. And ARPA will not drop on fund balance until you spend the money. Then you recognize the revenue expense.
So you're saying, this is.
So it's in a separate fund,
Yeah.
so it doesn't.
It's not. It's not really general plan.
So it won't be.
No, no,
I'm gonna make sure we're all
see the separate.
right, so it's not gonna affect revenue the same way that my taxes. Okay. So then it shouldn't have any of that on these.
That's how it's.
No,
But I-
coronavirus will be, most likely zero.
Wait, they change it.
ARPA.
Which was the first part, so that's for just the second part.
It was. I mean, my report's here, I'm just. I don't care whether it's credit card debt, installment loans, Washington Trust. Bond, it doesn't have, so. So the biggest. Well, maybe it was our paper. We know what's.
To answer your question, if you look on page 210, you see that there was proceeds from issuances, just refunding the bonds. That's essentially increased their fund balance in those years. So that's why fund balance can be so much of any problem. It's got the money, and spent the money on whatever project, the funds.
So we're gonna back the same.
So, they forget what projects. Mostly.
We're refinancing those now. Pages.
That's what I'm updating.
And it may be adjustments. See.
The other thing I would suggest for the private is. I'm not a CPA, so this. Somebody should have the mailbox to see the five of them can make budget decisions. But it's right, and I was very careful to say, of course, you would type that number. All that stuff. I wanna make sure I have the right things, because I wanna put 2005 in. Probably not wait. We keep no state. But so.
And we did cut down capital expenses the last budget. The budget. Money to the stuff that we paid, all of we use that's where we. We take payments on instead of $500,000. The DPW buy on the red line, pay it off for 5 years. You just took $500,000.
This question, we don't have, what do you think of the natural percent on unreserved? In funded reserves of the general funds. It's not a report, it's a net. That's what GFO is tonight, that's what I have.
So what's the metric again?
It's on UNR, so it must be on the. Because it's all over the place for us. Looking at it may be explained by what we just. But that can go out to for it.
So we can use the benchmark stuff to other communities and towns.
We are in our focus, our peer group, we're not.
So we created a, for,
Okay.
We're not.
state central.
I just have a question just to make sure I'm looking at the reports correctly. On page 125, is it safe to say that this is one of the first years of 2 years that are not running a deficit on our pensions in the town? Am I reading that correctly? Page 125.
125, this is your general police town plan, so this is a school understatement. Yes, it's not into a net asset position.
Yes.
Right.
Thank you.
So unfortunately, you guys have to go over that since the town, the state dictates the terms of the funding. Most of the time, for like a school fire ban, a lot of people would pull back on funding those bans since you're a board funding. Puts. Might just go into a more net asset position.
As a heard you, or you could see,
You give out a rate.
yeah.
If you would like it, I
Yeah.
you send me an email.
I said, because what you guys said is not naturally.
Yes.
Don't forget on, ask the question about anyone with John you mentioned IT security. Was there an instance, like, can you elaborate a little bit on that, or?
It's just a general comment, just because I have had clients with the cyber breaches and the ramifications of that.
Municipal,
Municipal, you know,
so nothing in particular sort of what happened, but.
no, that was just a general comment, that wasn't specifically targeting at your IT for, but it's just something that you can always be under purview.
You didn't actually look at that anyway.
IT controls is part of our test, but from a accounting perspective, not at all cyber security perspective. Right.
You're not looking at a security system.
I'm not saying how firewalls,
Yeah, you're not looking
you know, making sure you have multi-factor authentication and things like that. We're just making sure the IT controls related to anything.
And anything else to provide?
Just making sure you maintain our staffing, just because as a state as a whole, there's really a big brain drain essentially of talent. Making sure that you retain the talent within the town, so it's should be a focus. As you guys were one of like 7 towns that issued their financial statements stay on time. There's very much.
Just seven.
So, So that just speaks to, you know, game and school.
What's the question? Can I ask a question? Thanks.
They move it up all the time. Thank you. Any other?
Okay, we're still on the.
If I haven't opened it up with comment, I wanted to make sure all the council people and the board actually chance that, that's the question. Everybody did, I'll open it up.
Thank you. How about you? Yeah. No question for the honor in your presentation. Referring to interfund payables and receivables versus. What funds are you restricted referring to that? Interfund payable accounts? Mr. President, so I report to the council. I don't individually report to your citizens, and that's how our impact is. Essentially, it's lined up,
Nobody answered.
but if the, my town finance director wants to.
I'll answer. So
Yeah.
it's our duty from. They want us to balance it out on a more regular basis and not just what's. So what's due to the town, the school, or what's due from the school to the town, we should be having more monthly or shorter. And discussing and making sure that we are all. on the same page.
Just a question. First, actually, which fund that applies to, is that the annual appropriation?
So it's the annual appropriation.
Okay. So
And
that's
the one that we used, to pay bills for the school, that,
that's what we're referring to. So
Yes.
I understand.
yes.
Okay, I have another question for the auditor, and it's going to be on a question for the. There's a comment here that there's a recommendation that the town and school part reconcile their interfund accounts monthly. As part of the auditor's review, does the auditor determine whether or not that is happening?
Did the auditor determine whether that's happening?
So.
Well, I guess anybody can get her. but-
Yeah, it's not, that's what I want, like, to make sure.
Okay, that is, oh, I see, that's why I'm asking. Right, that's why I'm asking the auditor, you just think you should be able to know what it's over. So that's gonna happen. Did the auditor ask the school department for any of their monthly financial reports and or what did the auditor receive in response to that?
I think the auditor does a full, goes to the school department with a full audit is what they do on.
So
So,
I just wanna, I'll ask a question, I didn't answer, I just wanna know. Did the auditor ask for monthly financial reports from the schools? Did the auditor receive any monthly?
Did you ask the monthly news report of the schools? We received it.
So. We only audited through 6/30/2025, and we have not initiated our 6/30/2026 audit yet. Because planning start burning out months and. As a result, we don't look at anything until that time, so we haven't started.
But to go back to the previous question, look, are you auditing just what she said is over, because it's basically the drawing down on the numbers. Are you also auditing that is paying the electricity payment? Well,
I audit their expenditures. So I do substantial testing on the expenditure of the school.
so it's not just.
Analytics, test of transaction, via sampling, and it's SP. On page 202 of your report. You have page 202. There's a reflected transfer of school unrestricted funds, for SBA on. Or does it not? I'm civil 90 exclusive. Is that? Thanks.
Tom, can you repeat that?
Yeah, I know, I looked at the meeting.
Yeah, it's great. Page 202, the transfer of the fuel restricted funds for SBA capital projects. So that would be. I always got it. Honestly.
Streets or regular school.
So it's if.
Yeah, it's what is. It's 17 to 16. Reported to CAD. The co-op. Versus, I mean, they might be the other room, which is the school. Restricted. Those are the same 2 months, actually, it's 3 months. It's in the same column for. Total other financial reasons. Uses.
What is it? Oh,
So you can state one for.
Yeah.
The state.
Yeah,
generates
that's-
districts or based on the numbers that are provided by the towns.
Okay.
So very common to devise.
Yeah, I don't.
Different, yeah.
This is SI information.
This is fine.
So that was not part of the.
You know, this is a review that's done through, voice of transparency.
The auditor did review that.
We don't-
It's in the review, in that slide.
Did the auditor make a determination about the value? Sorry. No,
It's already said. That's.
I knew,
Mr. President, I'm not putting on the river guy, but essentially, in our contract with the town, they have a confidentiality policy. Which means I can be responding to members of town management and the council, so that's what, I'm not trying to be a jerk on. But I do have a spirit over agreement, otherwise I'd be reaching.
Okay, so, on page 113, your report states. From June 30th, 2025, now it's reviewed. That looks more divided. Outstanding claim. Outside this. Insurance. I just wanted to find out the last part of the. And why is we're unable to determine the estimate potential.
The order to go to.
Well, I first like to know if that statement is part of the auditor review. Then second, I just like to know why it is that the town is paying for the estimated potential. Outstanding.
so was that still part of the
So
review?
we didn't have any large claims. In during fiscal year 25 or looking. We don't have any part.
Well, I understand that, that's not what the sentence is. Management doesn't mean that estimated dimensions. Doesn't say that the potential exposure is 0, it doesn't say what is minimal. It says that the town's only able to estimate. So I'm just trying to understand why we're unable to estimate potentials.
Somebody, you may have really got to see it.
So who made that statement?
That's the next one.
We don't know who made it. Yeah, I'm not.
So we reach out, we do as part of our procedures, we reach out to the lawyers. And ask them for their opinions under. From them essentially. And they tell us what cases they're working on, and at that time, they determine a reasonable loss. Or when is terminable. And how much is the value of the loss. And sometimes they aren't able to estimate that number based on where they are within that legal loss people. So they might want to be discovered, but they might think that they're in the rules, but they can't keep doing that.
So based on what you're supposed to learn.
Based off.
Quality is very similar.
One. just
Which
based
quality
on-
is concealed about-
Also being school.
Remember figures of the Denver house.
Oh, okay.
So any potential claim came in that we knew about. Obviously. We would report that it was covered by insurance and wasn't potential exposure at the time.
Oh, gotcha.
So nothing really rose last fiscal year.
other than zoning appeals. And I know of. That would potentially create liability.
Even those like you have to be.
Yeah.
So Anthony, ultimately, it's one of these things to try to, at that time.
Well, yeah, because that's not starting time, you know what you're working on.
But if you're so early in the discovery
Correct.
process. Rise up to a dark. Okay.
And that's.
Okay, good question.
Yeah.
That's a good question.
Anyone else? Dave, thank you so much for the presentation. Entertaining a motion to the. All in favor?